Have you ever wondered how to turn inflation into your financial ally? I'm Money Dynamo, your guide on this journey towards mastering inflation. Subscribe now to not miss any key insights. Are you ready to turn economic challenges into golden opportunities? Join me, and let's discover together how to do it. Let's start by unraveling the mystery of inflation. Inflation isn't a uniform phenomenon. It has various facets that impact in different ways. From demand inflation to cost inflation, understanding these variations is crucial to anticipate their impact on our personal finances and investment strategies. One of the key elements to consider is the factor of time. Inflation can erode the purchasing power of your money over time. How? Well, $1 today won't have the same value in the future due to rising prices. So, how do we face this challenge and turn time into our ally? That said, in this video, we'll understand why inflation doesn't have to be our enemy. Imagine a world where inflation works in your favor, and that's precisely what we'll discover together. Strategy 1. The power of real estate. Real estate represents tangible assets with intrinsic value. It includes both land and the structures built upon it, such as houses, offices, commercial spaces, and industrial facilities. Owning real estate involves not just personal use but also its potential as an investment. One of the most powerful aspects of investing in real estate is the ability to generate passive income. Through rentals and other mechanisms, real estate can become a consistent source of monthly income. This provides financial stability and the possibility to diversify income sources. Strategy 2. Investments in tangible assets. In a world where stocks might fluctuate, we'll discover how certain tangible assets act as an anchor for our wealth. Tangible assets include real estate, precious metals like gold and silver, commodities like oil or agricultural products, and even collectibles like art or vintage cars. Their physical presence often provides a sense of security and stability, especially during economic uncertainties or market volatility. Diversification is another key advantage. Tangible assets tend to have a low correlation with traditional financial markets. For example, when stock markets fluctuate, the value of real estate or precious metals might not follow the same pattern. Additionally, tangible assets often act as a hedge against inflation. During inflationary periods, the value of cash may decrease, but tangible assets, especially ones like real estate or precious metals, tend to maintain or increase in value. They serve as a store of value and a way to preserve wealth over time. However, it's important to note that investing in tangible assets also has its challenges. They often require a considerable initial capital, can be illiquid, and may involve ongoing maintenance costs. Strategy 3. Debt as a strategic tool. Now, let's delve into strategy number 3, debt as a strategic tool. How can debt become an ally in times of inflation? Using debt as a strategic tool might seem counterintuitive, especially in times of inflation when the value of money tends to decrease. However, when used smartly, debt can become a powerful ally for businesses and individuals seeking to boost their growth and increase profits. In the financial context, debt is often used as a means of financial leverage. This involves leveraging borrowed funds to invest in opportunities that yield a return higher than the cost of borrowing. In times of inflation, where assets tend to increase in value, leverage can significantly amplify returns. Successful businesses often resort to debt to finance expansions, new projects, or the acquisition of strategic assets. In an inflationary environment, construction costs and asset acquisition might increase, and access to financing through debt allows companies to seize opportunities without compromising their current liquidity. Imagine a company operating in the real estate sector during an inflationary period. This company, instead of solely using its own resources, decides to take out a loan to finance the construction of a new residential development. As inflation drives up property values, the company's return on investment is magnified. In some cases, debt can act as a hedge against inflation. If a company can secure financing at fixed interest rates during an inflationary period, the real cost of the debt will decrease as the value of money depreciates. This means that, in real terms, the company is repaying less than what was initially borrowed. It's crucial to highlight that using debt comes with risks and should be managed cautiously. Interest rates, economic conditions, and the ability to generate returns on investment are critical factors to consider. Solid financial planning and careful risk assessment are essential for debt to become a successful strategic tool. Strategy 4. Monetize your expertise. We conclude our journey with the final strategy: monetize your expertise. Your skills are an invaluable asset, and I'll guide you through various ways to monetize your expertise. The ability to turn your expertise into a source of income is a powerful strategy in times of economic uncertainty. Let's start by analyzing how your expertise can be transformed into a solid financial opportunity. Let's delve into a practical example to illustrate this concept. Imagine you've worked in the field of social media for years, accumulating knowledge about growth strategies. Now, consider offering an online course detailing these specific strategies. This course would not only share your knowledge but also represent a constant source of income. Another option is to offer specialized consulting services. Following the example, you could provide personalized advice to companies looking to expand their presence on social media. This consultancy becomes even more valuable in times of inflation, as companies seek to maximize every dollar invested in advertising and marketing strategies. The goal here is to transform your expertise into a source of recurring and significant income. This approach not only allows you to capitalize on your existing skills but also positions you as an expert in your field. Remember, in an inflationary environment, your expertise can be your greatest asset. Don't underestimate the value you can bring to the market with your knowledge. In summary, the strategy of monetizing your expertise is a valuable opportunity to tackle inflation. Turning your skills into courses, consultancies, or specialized services not only enables you to generate additional income but also diversifies your sources of earnings, providing stability in times of economic uncertainty. And that's all for today. We've broken down 5 masterful strategies to not only survive but thrive in times of inflation. The key is to embrace change, adapt, and see opportunities where others see challenges. Do you know a specific strategy you're eager to try? Let me know in the comments. If this journey has enlightened you, don't forget to like, subscribe, and share it with your fellow entrepreneurs. Until next time, keep fighting and turning challenges into triumphs. This is Money Dynamo. See you soon.